everyone. So I forgot that the question asked about the Fibonacci tools was asked how to do it in TOS. So I'm just going to show you where it's at in TOS, and then I'm going to roll into the rest of the video where I explain in TradingView how I actually use the tool. So when you've got your chart pulled up, you can just go up to your drawings and then drawing tools, and then it's the little percentage sign. That's the Fib retracements. That's the one I use. So just real quick, if I wanted to know this move right here, I would just draw it from high to the low, and then that gives me kind of an estimate of the expected moves. And you'll see it's pretty close to these lines here, and then it also found support and resistance there. So real quick, that's just where it's at. And then you can obviously customize this under the studies. I'm sorry, not studies. If you highlight the tool, you can edit properties and you can change the colors. You can select which ratio levels you want in there. You can even, type them in as a different number or whatever. So you can customize it there. I just have mine as colored bands in TOS, so I can get an idea of just some differentiation. So that's where you find it. That's how to edit it. Now let's kick it for the rest of the video. Hey everyone. So someone asked if I could talk a little bit about the Fibonacci tools that I use in my trading. Now, if you're not familiar with the Fibonacci indicators, it's based off of some ratios and multiplication and division of the numbers in the Fibonacci sequence. Now, there's plenty of websites out there that do a much better job explaining the details behind it. But what I want to impress upon you is this is a tool like any other tool provided by your trading platform or your charting software. It's just something designed to make a task easier for me, and because I believe that there's some truth to the math behind the Fibonacci sequence and the ratios that are used in trading, I rely pretty heavily on it. So let's take the Sportsman's Warehouse trade that I recapped this week from Friday. Okay, so I pretty much exclusively only use the Fibonacci retracement tool. Now, I like to do my charting for my videos on TradingView, and they've got all kinds of different stuff. They've got channel, wedge, resistance, arc, spiral. I don't know what all this other stuff is, and quite honestly, I'm not going to say I don't need it, but I have found the one tool that I like, which is the Fib retracements. What a retracement is going to do is it's going to tell you where you can expect a possible move to retrace to, or that's how I like to use it. So I like to use it for entry points and profit targets, and they're estimates, right? This is not an exact science. So let's take this move that happened. So let's say that you watched this move run up and you didn't get in because you're, I don't know, maybe looking for a short, right? Let's think about how we trade this as a short. So we see this move up and we've got this pullback here, and then we notice a lower high, and it's like, okay, so what do I want to do? Well, let's fib this. So we want to go from the high of the move to the low, which in this case is the second minute candle after the opening right here, okay? So all I want to do is just line that up. And then every line is just a Fibonacci ratio in the sequence. Now, I have this set for the numbers that I like. Now, 0.5 or half of the move is not part of the Fibonacci sequence. It's not a Fibonacci ratio, but in trading, a lot of moves, supposedly it's been said that stocks will give back about half of the gains. So I like to see the 0.5 price level to know what's going on. So here, if I'm watching this and it starts pulling back, and it's more than just one or two little pullbacks that would indicate maybe a little bit of consolidation and a possible move higher, I'm thinking, okay, where can this thing go from here? So at this point, I like to use the 618 and the 786 percentages as kind of a gauge, right? So you'll see here that this came down to tested that 465 area, which is the 0.786 ratio level, and then it made a lower high, right? So here's like, let's think about a trade plan. So if I just do a trend line there, because I feel comfortable. I'm not gonna say I feel comfortable getting in on a short on a lower high in a situation like this when you start to see it get pushed back down and then maybe start to roll over. So now, because we've got the chart here in hindsight, it's obviously easy to say, hey, this is where it could go. Again, these are all estimates, and I understand that when the chart is looking like this, because it's intraday and you know the things are moving, all you can do is make a guess, make an estimate, right? So you see here you've got this increase in volume, but yet the price got stuffed right here around 480, which had some problems with a few minutes prior. So to me, that indicates that this move could possibly reverse or have a pretty deep pullback at this point. You got to think about it. This is a $4 stock that went from 405 almost up to $5. So that's almost a full point move. So I'm going to be looking for a move in the other direction at this point. That doesn't mean it's necessarily going to happen. But let's get back here. So let's say you're like, okay, I'm going to get short after you see this candle and you get short right here. Your risk can just basically be over the current high of day. And if this thing is going to pop and move in the other direction, let's say your final bailout is at right around $5. Because when I'm looking for a stock to go long, I want to see it test and then bounce from either the 786 or maybe even the 618. I like to play these for, if it does pull back that far, an entry point and then maybe a retest of high of day. But in this case, so it bounced here, made a lower high, and then it rolled over. But if I was looking for this thing to go long, I would be looking for it to make a move up around the $5 mark. Now, obviously, because this just happens to be around the whole dollar, I would look to take profits around $5, and it also coincides with the 1.272 ratio. My second profit target would then be up around 1.618 if it got through this. So you could play it a couple of different ways. It's just kind of a gauge, but in this case, right, you could use this to kind of set up a short trade. If you were to get in in this area, you think, okay, well, where could this thing maybe pull back to? Well, if I'm bearish on it and I'm looking for it to make a move back to the halfway point, is really kind of what I'm looking for. So I'd be thinking, okay, I'll have a primary profit target, let's say around 450-ish, somewhere around 0.618. And then if it gets through the $0.50, I'm probably going to take my profits if it looks like it might bounce around this 50% level. Now this one obviously went a little further. It's probably closer to about a 40% retracement of the move. So that's just one way you could play it to kind of maximize where you could take profit. Now let's, and I can't say that to tell you that this is going to work in every single situation. Let's look at a big board stock, okay? How about NVIDIA? NVIDIA on Friday, let's just do this. So it looks like we had a pull back down here. So if I'm using this and I'm thinking, okay, where is this thing going to possibly retrace to? We're seeing some support here around, what is it, 159.75-ish is where we're getting a little bit of support, excuse me. Where might it bounce back to? Well, again, I'm going to look at probably around that 618 level for at least a short-term play. Even whether I'm going bearish or bullish on this one, okay? So let's say it makes this move and you see that it's getting some support and you want to play it long. I'm going to look to take profits at around this 160-120 area because the fib ratio is telling me, hey, the 618, maybe even 0.5. And lo and behold, look, it bounced right there and it turned around. Now, if I was looking for a continuation on this to go lower, it did get stuffed right here above the 0.786 level. Actually, I guess it would be below it since we're talking about a bearish move here. So if it gets stuffed here, I'm out the trade. That's when I know, hey, you know what, it's time to get out of this thing, right? So that's one way to think about it. It can also give you some sort of indication of when you should get out of the trade if it's not going to go in your direction. Now let's look at this the other way too. So this thing obviously made this crazy recovery here, right? So let's see. You know what? Let's say that you watched it move down and then it did this, and you want to know, okay, well, where can I maybe expect either to get in on this pullback if I'm looking to long this, and where could it maybe go, or where could it pull back to? Same thing. So we run it from the high to the low, and I'm going to blow this up a little bit. And that's a pretty deep pullback in this case. So if it got up to 161.38 and then it pulls back to just above 50%, me personally, I'm going to be a little bit concerned that it may not go higher. Like I said, for me, I like to look for a bounce at either 786 or maybe even the 618 level. Now, you could argue that the price did get pushed back up to that level there, but look at the volume on these two candles. So look at the volume down here. There's next to no volume, so I would probably not get in here, right? I'd be looking to get in at the breakout, maybe over this high, previous high here. And let's say that you did watch it make this move down and it starts to push back up. Okay, well, where can I take profits? Lo and behold, look. And I'm not making this stuff up, guys. Like, I literally you watched me just type the chart in. So here's this 1.272 level, and look where it got stuffed. Right there, 1.272. Okay, great. Well, let's wait. Let's get out of the position. Let's wait for a pullback. Okay, so get a little pullback, and then it starts to move again. And then where does it go to? 1.618. So those are the two profit target levels that I like to look at. And again, like I said, you just saw me pull this up. I didn't. You can't make this stuff up, guys. Like, this is to me the power of charting. And where did this thing ultimately go? Look at that, right up to, here it is, the 2.618 level. Right where it went. Like, you cannot. How do you explain that this is just coincidence? To me, this is more than just coincidence. The Fibonacci ratios occur in nature. Things that are not man-made have these ratios in them. So how do you explain that? I don't know. That's why I feel that the fib tools are very good for use in your trades. A lot of people probably think that they're voodoo and garbage, and that's fine. I'm not saying that everyone's got to use this tool. I just like it because it helps me pinpoint possible entries and exits, and it gives me a little more confidence in some of the trades that I make. So I hope that helps. And again, I encourage you guys to do some research on the Fibonacci sequence, the Fibonacci tools that are available for stock trading. There's books out there. I've read a couple of them, and I personally find it pretty fascinating stuff. Again, because there's math behind it as well. So it's not just someone's opinion on a particular indicator. There's actually some proof in the pudding, so to speak. So again, I hope that helped. Please drop me some comments below if you've got any more questions or you want to comment. Thanks, guys.
Yeah, I like to keep it mellow. I smoke and keep it mellow. I drink and keep it mellow. Every day I keep it mellow. Every day I keep it mellow. I smoke and keep it mellow. I drink and keep it mellow. Every day I keep it mellow.